Starting this August, 3 real money boosts reset for retirees over 65. And the reason most people never claim a dime of them is that nobody whose job it is to collect your money will ever call to tell you how to keep more of it. If you're over 65 or you love someone who is, subscribe and turn on the bell so the next benefit update actually finds you before the deadline does. Now, picture a 74-year-old retired mechanic in Ohio. I'll call him Raymond. He's an illustration, not a real client, but everything about his story is real for millions of people right now. For 9 years straight, Raymond paid his own Medicare Part B premium straight out of his Social Security check, $185 a month in 2025, quietly pulled out before the deposit ever hits his bank. He never saw it leave. He just saw a smaller number land. 9 years. That's more than $2,200 a year. Gone. And here's the part that should make you sit up. Raymond qualified to have that premium paid for him the entire time. Every single month. Nobody called him. Nobody mailed him the form. Because the system only pays the people who ask, and nobody whose job it is to collect your money is ever going to call and tell you to stop. If you're over 60, don't scroll past this one. A single phone call this week could put hundreds of dollars back in your pocket. So here's how this goes. 3 boosts, all live, starting this August. I'll walk you through each one, what it is, the exact form, the office to call. And I'm saving the third for last on purpose, because it's the easiest of them all. You claim that one without ever picking up the phone. Stay for it. And before you talk yourself out of the room, this is not just for folks scraping by, and it's not just for the comfortable ones with a paid-off house either. On every single one of these, I'll tell you exactly who it helps most. So don't count yourself out yet. My name is Walter Hayes. For more than 15 years, I've done one strange thing for ordinary families. I read the fine print of these government programs. The pages, nobody reads. I don't sell anything. I don't work for the government. I just read the rules so you don't have to. Let me clear up the biggest myth first, because this is how good people get scared out of their own money. There is no single new August law that hands every senior a check. Anybody telling you that is selling you something. What is true is quieter and better, a handful of real rules reset this time of year, and 3 of them put actual cash back in your monthly check if you know the form to ask for and the office to call. That's the whole game. So boost 1, the one that was bleeding Raymond dry, it's called a Medicare Savings Program, and in plain English, it can pay your Part B premium for you. That $185 a month, paid, not by you. And here's where they lose people. There isn't one program, there are 3. And they hide behind 3 little names nobody ever explains. QMB, SLMB, QI, alphabet soup. And that soup is the trap. People hear 3 sets of initials, decide it's not for them, and hang up. The biggest one, QMB, goes even further. It can wipe out your deductibles and copays too. Now, listen close, because this is the whole thing in one line. Being legally entitled and actually getting paid are 2 completely different things. Nobody mails you this application. The names scare you off. And so the money just sits there with the government month after month with your name on it. Here's who gets in the door. For a single person, the income limit sits somewhere around $1,300 to $1,700 a month, depending on your state and which of the 3 you land in. And the asset rules, the savings test that used to trip everybody up a lot of states, have thrown out entirely. Gone. So that door is wider than you think. The payoff is simple. That $185 a month stops leaving your check. More than $2,200 a year quietly pulled out of your check, handed back to you. Read that again? This one helps a tight fixed income the most. That's the honest truth. But before you say, that's not me, the limits are higher than almost everyone assumes. Do not count yourself out at your own kitchen table. Picture a widow, I'll call her Ruth, 69, living on one Social Security check in a small apartment. She was sure she made too much to qualify. She almost didn't call. Turned out she was about $40 a month under the line. One application, and her premium got paid money she'd been handing over for years. So here's exactly what you do. Call your state Medicaid office or your local SHIP office, that's the free Medicare counseling service in every state, and you say one sentence, write it down. I'm on Medicare, I'm on a fixed income, and I want to apply for a Medicare Savings Program to have my Part B premium paid. That's it. That one sentence starts the whole thing. That's boost 1. That's the faucet Raymond left running for 9 years. But the premium leak is only the first faucet, because there's a second bill, and this one doesn't hide inside your Social Security check. This one lands in your mailbox every single year with your name printed right on it. And it's the one where homeowners over 65 overpay the most. And just like the premium, the office that sends it will never mail you the reminder that could freeze it in place. That bill is your property tax. Your property tax. That bill that lands in your mailbox every single year, and if you own your home and you're past 65, there's a real chance it's higher than you legally have to pay. Here's how this one's different from the premium. There is no single national number I can hand you. This bill isn't Washington's, it's your county's. And it's the form nobody mails you, your county will never send it over on its own. So do me a favor right now. Go pull your last property tax bill out of the drawer and look at it. If there's no senior exemption line on it, no over 65 anything, you may be overpaying every single year and never once knowing it. Here's what's actually on the table. Two kinds of relief for homeowners, 65 and up. One kind freezes a piece of your bill so it stops climbing. The other knocks thousands of dollars off what your home is worth on paper, and since your tax is built from that number, a smaller number means a smaller bill. Two roads, same place, hold the bill still, or shrink what it's calculated from. And here's the trap. The same trap every time. This is your county, not some national office. So in most places, you have to apply. And in a lot of places, you have to refile, sign up again, prove you still qualify year after year. That refile catch alone trips up more people than anything else. You sign up once at 65, you figure you're set for life, and in plenty of counties, you're not. 1 year it drops off, and the full bill comes roaring back like it was never gone. The assessor doesn't send a reminder. Nobody walks over to your kitchen table and tells you. Being legally entitled to this and actually getting it off your bill are two completely different things. Let me show you what this looks like where you live. Take Texas. If you're over 65, Texas gives you a school tax ceiling on your homestead. In plain English, the school tax part of your bill, usually the biggest slice of the whole thing, gets frozen. It can't climb anymore, even as homes around you get pricier and everybody else's taxes creep up. Picture your bill locked at, say, $2,000. 10 years go by. Your neighbors watch theirs crawl toward $3,000 and yours hasn't budged. That frozen gap, year after year, is thousands of dollars that stayed in your pocket instead of the county's. That's not a rebate check you have to chase down. It's a leak that just stops. But there's a date attached to claiming it, a filing deadline nobody announces. Remember that. We'll come back to it. Now New York. Different name, same idea. Enhanced Star. Once you're 65 and under the income cap, it takes a big chunk off your home's assessed value before the tax is even figured. Knock, say, $30,000 off what your house is worth on paper, and that can turn into several $100s off the real bill. And here's the part people miss. It's not a one-time thing. That money comes off every single year you own the place. Stay in the house another 10 years, and you're talking thousands quietly kept. Illinois and New Jersey run their own versions, senior freeze programs that lock your bill in place, and deferral programs. Now, be careful with that word, deferral. Deferral doesn't erase the bill. It postpones it, the tax waits. Usually in your soul, the home is sold or passes on. That can be a real lifeline if you're cash tight and house rich. But it's a delay, not a gift, and you should know the difference before you sign a thing. Type your state in the comments. I read them, and this is exactly the kind of thing your neighbors need to see, because half of them are overpaying right next door and have no idea. And listen to me here. Don't do the thing people do at their own kitchen table, where they decide this isn't for them before they even ask. Comfortably retired, this is still yours, barely holding on to the house, then it's especially yours. A lot of these exemptions aren't income tested at all. You qualify by age, period, no matter what's in the bank. And where there is an income cap, it's usually higher than people assume. Do not count yourself out. Picture a couple. I'll call them the Delaney's. Both 70, same house for 40 years, raised 3 kids in it. Every year that tax bill came, they groaned and they paid it in full. Nobody ever told them there was a form. Then one afternoon, standing at the assessor's counter for something else entirely, a clerk slid a single page across and asked, "You two never filed for the over 65 exemption?" They hadn't. They'd overpaid for years. Once it was corrected, they kept several $100s a year. And for some couples in their spot, it climbs past 1,000. One page. One question nobody had ever bothered to ask them. So here's exactly what you do. Call your county assessor's office. The number is printed right there on the bill you just pulled out of the drawer. And you ask, by name, for the senior or over 65 homestead exemption and any assessment freeze. Those exact words. Write them down before you dial if your nerves get the better of you, and read them straight off the page. The clerks hear it every day. And then, the part almost everyone forgets. You ask, what is the filing deadline? That's the piece I told you we'd come back to. Every one of these has a deadline, and it is the one thing the county never announces. Miss it, and you wait another whole year for money you already earned. Ask for the form, and ask for the date. Same call. Think about what's stacking up here. The premium slipping out of your check every month, and now a second bill, the one with your name printed right across the top, that you may have been overpaying for years without a single soul telling you. 2 leaks. Both of them plugged with a phone call and the right words. So that's 2 boosts, and both of them need you to pick up the phone, one to your SHIP office, one to your assessor. But the third one, the one I told you I saved for last, that's the easiest of all 3, because you don't pick up the phone for it at all. At 65, the IRS quietly hands you extra money right there on your tax return, and the reason most seniors never see a dime of it comes down to a single box and one wrong keystroke. 1 box, 1 keystroke. That's the whole difference on this one. At 65, the tax code hands you an extra standard deduction, stacked right on top of the regular one everybody already gets. No office, no form to chase down. You claim it on the very same return you file every spring. And yet people quietly overpay year after year because that extra deduction only lands if a single little box gets checked. And that box only gets checked if your birth date was typed in right. So let me show you the size of what's sitting there. If you're single, that extra deduction is worth around $1,950. If you're married, it's about $1,550 for each spouse who's 65 or older. Both of you qualify, both of you get it. And on top of that, recent tax law added a newer senior deduction, more money resting on the same idea. That one starts to shrink at higher incomes, so I'm not going to hand you a figure that might not be yours. But for most folks watching this, it's real, and it stacks. Now, a deduction isn't a check in the mail. It's income the government agrees to stop taxing. So for a lot of retirees, that extra $1,950 quietly turns into a couple $100 you don't owe, or a couple $100 more coming back to you. That's the grocery money you already earned, sitting on the table, waiting for 1 box. And here's the part I love about this one. No phone call, no office, no waiting on hold, just 1 box checked right. Read that again. Every other thing I've told you today needed you to pick up the phone. This one needs you to look at a single line on a piece of paper. But the trap is quiet, and it's easy to fall into. Tax software checks that box automatically, but only if your birth date is entered correctly. Fat finger the year, leave the field half filled, and the program does exactly what you told it to. It doesn't stop. It doesn't warn you. It doesn't turn around and say, wait, you're 67. You get more. It just moves on, and you silently pay tax on money you never owed. Nobody flags it. There's no red letter. And because this is a deduction, not an income-tested program, this one reaches everybody who files a return. Tight, fixed income, comfortably retired, doesn't matter. So don't count yourself out at your own kitchen table on this one. Whether your check is small or your house is paid off, if you're 65 and you file, the deduction is yours. The only person who can leave it behind is you. Picture Margaret, a widow, 68, and again, I'm using her as an illustration, not a real client. Margaret filed the standard way for years, the same clean return, every April, done. Nobody ever told her she was sitting 1 line away from more. When someone finally looked and fixed it, she kept several $100s more that same year. Not from a loophole, from a box that should have been checked all along. So here's exactly what you do. Pull out last year's return, or open your software and look at your birth date. Make sure it's right. If someone prepares your taxes, ask them one flat sentence. Am I getting the extra standard deduction for 65 and older? That's it. That one question puts them on notice. And if you file your own, check that birthday box before you hit submit, not after. Now, let me add it all up, because this is the whole reason I asked you to stay to the end. Think back to Raymond, our retired mechanic in Ohio. That Medicare Part B premium leaving his check was more than $2,200 a year, gone before the deposit ever hit. The senior property tax exemption on his house? Often more than that. And this deduction? A few hundred on top. Line those up on one notepad, and for someone like Raymond, you're looking at thousands of dollars a year. Real money, money with his name on it, every single year, just waiting to be asked for. Remember Raymond? 9 years he paid that premium out of his own pocket. He qualified the whole time. One phone call would have ended that leak years ago. But nobody called him. Nobody mailed him the form. Because the system only pays the people who ask. And nobody whose job it is to collect that money is ever going to call and tell you to stop. He didn't know the option existed. Now you do. And because there's real money on the table, there are people circling it. So hear me on this. There is a scam that shadows all three of these. Somebody calls, warm and official sounding, says they're from Medicare or from Social Security, and they need your bank details to process your benefit or to send you your new savings. Stop right there. Medicare and Social Security do not call you asking for bank details to process anything. That's not how it works. If a call like that ever comes, do exactly this. Stop, hang up, you go to them. Whoever's on that line is a thief, not the government. So let me make this simple, because knowing isn't the same as doing. Here is exactly what I want you to do this week. 1. Call your SHIP office or your state Medicaid office and ask to apply for a Medicare Savings Program to have your Part B premium paid. 2. Call your county assessor and ask, by name, for the senior or over 65 homestead exemption and any assessment freeze, and ask them the filing deadline before you hang up. 3. Check that birth date box before you file your taxes. 3 calls, or really 2 calls in one look, that's the whole list. Now, one honest word before I let you go. This is general education, not personal tax or legal advice. These rules vary by state and by your income, and the exact numbers shift year to year. So confirm your own situation with your county or your local SHIP office or a qualified preparer who can look at your actual return. I read the fine print so you know what to ask for. Then you go get it confirmed for your kitchen table specifically. And do one thing for me. Send this to one person you love who's over 65. A parent, a neighbor, the friend from church who's been paying that premium for years and never knew. Because nobody official is going to call and explain this to them. No letter is coming. You might be the only one who ever tells them. That one share could put hundreds of dollars back in someone's pocket this year. So don't leave it on the table. You know the 3 boosts now, you know who each one helps, and you know the one sentence to say for each. The only thing standing between you and that money is the asking. Make the call this week. Check the box. And pass it to somebody who won't hear it from anyone else. He didn't know the option existed. Now you do.